makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, we'll discuss what's moving the markets a little bit later with Sharon from Goldman Sachs. Away from the markets, let's also talk about the two big political stories dominating the news agenda. First of all, we'll discuss the fallout from Russian drones crossing into Polish territory with our Oliver Kirk. But let's start with our Rosalind Matheson on the latest in the spate of political violence in the U.S. So a search is continuing for the killer of a U.S. conservative activist, Charlie Kirk, after he was shot at an event in Utah. The 31-year-old was speaking outdoors when he was killed. Kirk's shooting is the latest in a spate of political violence in the U.S. that's drawing an outpouring of condemnation from Republicans and Democrats alike. Well, President Trump has ordered U.S. flags to be lowered to half-staff until Sunday evening in Kirk's honor.
It's a long past time for all Americans and the media to confront the fact that violence and murder are the tragic consequence of demonizing those with whom you disagree day after day, year after year, in the most hateful and despicable way possible.
We're now joined by Ros Matheson. Ros, this is a shocking death. Why was Charlie Kirk also so important to President Trump?
Well, he was very loyal to Donald Trump, including repeating his claims about the 2020 election and that it was stolen. And in a way, he stood by Trump when other Republicans kind of edged away in that intervening period when Trump was arguably a little bit in the political wilderness. And Donald Trump remembers that. And of course, using his organization as it grew to really mobilize younger people, not just those on college campuses, but also people in high schools, towards conservative values and conservative political views, and really became famous for his willingness to debate anybody. People who disagreed with him, he'd argue with them and take them on, be they at college or politicians, and therefore not just preaching to the converted, but trying to bring in other people to the conservative movement. And you can say arguably that contributed to some extent towards Donald Trump's electoral success in 2024 because of that grassroots mobilization, millions of followers on social media, his podcast, reach that you just can't get these days from TV ads or newspaper ads. And so certainly potentially playing a role there, and possibly would have played a key role in the midterms as well. So the question is now, with his killing, what happens to his organization, and does it mobilize further?
Ros, what are the wider political repercussions of this killing?
Well, obviously, you can see politicians of all stripes condemning this, Republicans, Democrats alike, and saying this is reflecting a society that is increasingly divided and polarized, and that this kind of violence is not a solution to that. And the question is, does this death, though, become politicized in some fashion? Does Donald Trump use this as a moment to crack down even further on campuses and what's happening at universities? Of course, he's been very critical of institutions like Harvard, saying they haven't done enough to stamp out anti-Semitic views on campuses. Does the discourse around that harden further? And as I was saying, does it impact in some fashion the campaigning for the midterm elections? Because again, these elections are increasingly coming at a grassroots level. It's mobilizing people on the ground, not through TV ads and other things. And does that sustain? And does this harden that campaigning? And do you see perhaps people mobilizing further in terms of conservative youth in America in the wake of this? And that could be a real impact potentially in elections to come.
Ros, thank you so much. Ros Matheson there, of course, on the shocking news. Bloomberg has also learned that Poland has asked allies for additional air defense systems and counter-drone technology to better protect its land from Russian incursions. Now, the request came after the NATO member shot down drones that crossed into its territory. For more, we're joined by Bloomberg's Oliver Kirk. Ollie, so will Poland now be given air defense weapons?
Yeah, it will likely be getting more support from a number of NATO allies. We've heard as much from a number of Polish officials over the last sort of 24 hours, saying that actually a lot of this stuff will be arriving over the next couple of dozen of hours, so presumably now reaching Polish territory. And we should say that the operation itself that took down a number of these drones, 19 apparently, there were air infractions on the sovereignty of Polish airspace, and a number of those drones were taken down by joint efforts across NATO, right? So there were F-16s from Poland, there were F-35s from the Netherlands, there were German Patriot missiles. There were also Italian surveillance and intelligence crafts involved in all of this, and taking what was a really sort of unprecedented move to have so many violations of Polish airspace since the beginning of war in Ukraine. And we should say this is the first time on the record, really, that a NATO member has shot things out of the sky over its own territory. The Poles taking this very seriously. They are asking to bring in Article 4 of the NATO treaty, which is consultations among NATO members when some of their sovereignty or independence feels threatened. Those conversations will be ongoing. As far as the Russians are concerned, they've said very little about this. We've heard early commentary from some of the Russian military that sort of indicated this could have been an accident, but then we heard from the Dmitry Peskov, the Kremlin spokesperson, who basically refused to give any sort of comment on that. So what we're watching over the next 24 hours, we've had a very sort of brief and bizarre acknowledgement of the event by President Donald Trump, but really there will be a lot of focus on A, how NATO should respond to this, and B, what the sort of calculus will be after this sort of incursion into Polish airspace, and does that change at all the equation for President Donald Trump and his view of dealing with Russia when NATO now being put under extreme pressure, and by the European perspective, deliberately so.
Oh, thanks so much. Oliver Crook there with the very latest, of course, on the situation in Poland. Now, the International Energy Agency says a record oil surplus projected for next year is looking even bigger as OPEC Plus continues to revive production and the group's rivals grow. The IEA estimates that world output will exceed consumption by an average of 3.33 million barrels per day in 2026. Now, for more, we're joined by Toril Bosoni, head of Oil Industry and Markets Division at the International Energy Agency. Toril, as always, thank you so much for coming on. There seem to be, in general, away from this report, just two radically different views on the market, that it's tighter than believed or that we're headed for a glut. Why is there such a divergence, first of all?
Good morning. So what we're seeing in the market today is that demand growth is slowing. I think that now 3/4 of the year gone, we're seeing oil demand around 700,000 barrels a day. And on the other hand, we're seeing record oil supply, not just from the unwinding of OPEC cuts that have added about 1.5 million barrels a day since the first quarter through September, but we're also seeing record production in the United States and Brazil and Guyana and Canada. So it's this mismatch between the very strong supply numbers and weaker demand. But what this supply glut so far has largely been absorbed by the market. Crude demand is also at record high in the third quarter due to refinery throughputs, but also direct crude burn. And the surplus in the market has largely been absorbed in inventories where they're having a less of an impact on the market, in particular in China for crude oil, but also in gas liquids in the United States. So we're not seeing this surplus piling up in tanks in key markets as of yet, but this is something that we think will shift towards the end of the year.
So Toril, so why aren't prices already weakening given this oversupply?
So prices have been trending lower. We're now near a 3-year low. But there's obviously different factors pushing and pulling the market, as we're saying. On the one hand, we have the surplus emerging in the markets that has so far been absorbed by Chinese stockpiling and inventories elsewhere. But we're also seeing the risk to supply from increased sanctions on Russia and Iran. We're seeing increased tensions in the Middle East at the moment between Israel, Iran, and now with an attack on Qatar. We're also seeing new sanctions on Russia and attacks on infrastructure there. So this is sort of supporting the market at the current moment.
Is OPEC Plus making a mistake, a big mistake, actually, by increasing production further?
As we've seen, the market has been able to absorb the increase in production from the OPEC Plus countries so far. And inventories are tight in OECD countries. Crude oil stocks are below the 5-year average. So obviously there is a room for the market to absorb this additional barrels. Then moving forward, it would all depend on the strength of oil demand growth and also at the continued stockpiling by some of the consuming countries.
So when you look at actually what happens next, how much of this, oil surplus, and you were trying to explain some of the dynamics, but how much of the oil surplus will likely be scooped up by China, for example, for strategic reserves going forward?
As we say now, that the oil surplus that we're seeing in our balances of 3 million barrels a day, as we say, it's untenable. There isn't the capacity or the ability for the market to absorb such an increase. China has capacity to continue building oil stocks. We saw from February to August this year about 100 million barrels of crude oil being absorbed by China. So if they continued to purchase oil at the current rate, that will help absorb some of the surplus, but it will be nowhere near the 3 million barrels a day that we are projecting. So there will have to be some adjustments on the supply or demand side to make the market rebalance.
But, Toril, do you think China ultimately could put actually a floor under prices?
So we are seeing that both China but other consuming countries are quite sensitive to the prices. So when the prices fall, they are increasing demand, not for end-use consumptions, but for storage. So that is, to a sense, a floor. But with the extent of the increase today, we could also see adjustments on the supply side. Prices fall to a lower level. We're seeing U.S. producers in particular adjusting their strategies and growth forecast in response to this well-supplied market and to the lower prices. So you can also see adjustments on this side.
Toril, going forward, do you think this is also the beginning of the end for OPEC's mission of supply management?
We don't think so. Of course, we're seeing now very proactive market management by the OPEC Plus Alliance, and they're meeting on a monthly basis to assess the market situation. Now there's a reset. We have completed the unwinding of the first tranche of production cuts of 2.2 million barrels a day. Now this is the start of the second tranche of 1.65 million barrels a day. But OPEC has only committed to the first increase of 137,000 barrels a day increase in the target from October. The actual increase would be less than what we're seeing, as some countries are already overproducing vis-a-vis their targets by about 1 million barrels a day. And we're seeing other countries are now reaching capacity constraints. So we don't think it's the end of the market management, but it's a different strategy than we've seen over the past few years when non-OPEC Plus countries have been taking all the growth in supply. Now, in moving forward, we're seeing the growth in production being split between OPEC countries and non-OPEC countries.
Toril, as always, thank you so much for joining us. Toril Bosoni, their head of Oil Industry and Market Division at the International Energy Agency. Now, coming up, some of our interview with the Chief Executive of Citi, Jane Fraser, on the outlook for the U.S. economy. That's next, and this is Bloomberg.
You've got to look at the collective impact of the tax policy, what's been happening with tariffs, and indeed the increasing deregulation that we're seeing. And they work together as a package. I think the most important piece for a corporate: clarity. We hate uncertainty. We like clarity. And our client base now is really starting to act with more confidence now that we've got clarity on those three fronts. So active in the capital market arena, in financing, much more active in investing, less sitting on the sidelines. And M&A has been very, very active indeed, as we talked about. Yeah. And on the consumer side, pretty robust spending through the summer. And we saw that really across all categories, helped a bit by lower gas prices. But the consumers being fiscally responsible, being more mindful around some spend, but still the spending levels were very pleasing.
So the momentum was pretty strong across all lines of your business in the second quarter. Of course, I don't want to precipitate the upcoming earnings, but can that momentum continue into the end of the year, just in terms of what you're seeing in advisory, in deal making, and in trading? Because it was a very strong quarter for trading as well.
It was exceptional for us on all fronts. I still see very strong pipelines. I see high level of engagement from clients. I see a sense of urgency as well, given the speed with which industry structures are changing, and there is still growth opportunity. I think growth will be a notch lower. We're keeping an eye on the labour market. It's a low churn market. So not everything is rosy, but we don't see a recession on the horizon.
Well, that, of course, was Jane Fraser, the chief executive of Citigroup, speaking exclusively to Jumana Versace. Now, joining us is Sharon Bell, senior European equity strategist at Goldman Sachs. Sharon, thank you so much for coming in.
Thank you.
I mean, it's all about the Fed. Everything's been repriced. I know we have CPI today. We had that labor market. How do you think that's translating into European equities?
Yeah, so, I mean, equity markets generally have been very strong recently, haven't they? And I think even though you've got that weak labour market data that we've seen in the US, it's caused investors to kind of price in a little bit more for the Fed. With growth being slow but no recession in the US or in Europe, and rates coming down in the US, that's not a bad environment.
So where do you see the biggest value? I mean, there's a lot of talk, of course, in defense in Europe, but also a lot of question marks about, growth and the ability to deal with inflation.
Yeah, so, I mean, I think for Europe, actually, inflation is probably less of a worry. I mean, we've had energy prices on the softer side this year. You don't necessarily see that feed through immediately to people's bills that they pay, but I do think that will feed through over time. And you don't have the tariff impact in Europe that you've got in the US. So US inflation will probably, I mean, we'll get more information today, but US inflation will probably run a little bit hotter in these next few months than European inflation. But we do think the ECB has probably finished its rate cutting cycle now, it having cut earlier, obviously, than the Fed did.
Sharon, do you think, I mean, the ECB does seem to be in that position. Is it because they were just faster at cutting, or is it just because of the economy, which is maybe less complex than other parts of the world?
I just think the US economy has been stronger up until now. It was particularly strong at the second half of last year, growing at about a 3% pace. So the Fed wasn't really in a position to be cutting aggressively through that period of time. Also, lots of uncertainty about the tariffs, how big they would be, what the pass-through would be, etc., the impact on inflation. I think we don't have zero uncertainty now, but we have a little bit more clarity on all those things. And the labour market is slowing in the US, which means the Fed can cut. Whereas I think the ECB was facing a weaker growth environment earlier last year and into early this year and could cut, therefore.
So how do you look at, when you look at Europe as a whole, there's a lot of political turmoil, certainly in France, but also other countries where you're seeing noise. Again, does that translate into equities, or are equities just like on a world of their own?
A world of their own. I mean, European equities did really well in the first quarter, but since then have been flatter. And I do think some of the concerns about Europe are showing through there in its sort of relative weaker performance since the first quarter. And some of those concerns are fiscal. You mentioned France, UK is another. There are fiscally vulnerable sovereigns in Europe. And in France, we've had political uncertainty rise again recently. And yes, that does feed through into a slightly higher risk premium for Europe. And of course, French domestic stocks, when there was more the announcement of the confidence vote rather than the result, but on the announcement, they certainly were hit.
How much does German fiscal spending help?
Yeah, so there are fiscally vulnerable sovereigns, but there are those in a better fiscal place, Germany's being the obvious one. And Germany is turning on those fiscal taps, really as we speak. I think the sort of plans were put forward in the first quarter, but we're expecting to see some impact on GDP, particularly next year in 2026. So absolutely, Germany's got more fiscal firepower, debt ratios in Germany are lower, and Germany hasn't grown. This is the problem. We haven't grown for the last few years. They need to spend fiscally on infrastructure. They need to spend on defence for lots of reasons, but they also need to spend on infrastructure. German infrastructure is weak at the moment, and growth has been weak, and they need to engineer some of that.
But are valuations still compelling?
Well, I mean, the market rose in the first quarter, flattish since then. Valuations have gone up in Europe. They've gone up everywhere. In the US, valuation is now very stretched versus history, well into the 90th, 95th percentile of its history. European valuations are also high, but probably more of the 70th percentile of history. So high, but not extreme. I do still see some value there, yes.
When you look at earning expectations, So are they, looking into the next quarter, going to be better than expected because they've come down a touch, or are earnings just going to improve?
They have come down a lot. And now, in fact, the consensus for this year is for 0, if not slightly negative earnings growth for Europe. At the outset of this year, the consensus expected 8% earnings growth this year for Europe. So
it's quite a change.
It is quite a change. And considering that the market rose quite a bit in the first quarter, especially. So you did have sort of earnings estimates down, markets up, which of course means valuations have moved up. I think the problem for European earnings is we in Europe make half of our earnings, if not more, in dollars, and the dollar has been coming down. And that's been the reason, really, for a lot of the downgrades, rather than specific economic damage. But that hasn't helped either.
But does that mean that returns will continue being modest in Europe compared to other parts of the world?
I do see modest returns on European equities. We've got 4-5% expected return over this next year. But then that's also true for the US, because the US is also on a high valuation. So, yes, modest, but like most places, because you're already on high valuations.
So how do you build a portfolio? Is it diversification? Do you buy gold as a hedge?
Well, indeed, and many are. If you look at gold prices, they've shot up recently, and I think that reflects some of the uncertainties out there, and of course central bank buying as well of gold. But it is tricky. We do advocate very much diversification. We think you get lowish returns everywhere. Diversifying, though, allows you to move away from very concentrated dollar asset positions, which people have built up in the last 15 years.
Sharon, we have many questions on the geopolitical front about, the drones coming in from Russia that actually landed didn't land in Poland because they intercepted them. But is that priced in? If there's some uncertainty, what do you buy?
Yeah, we saw the Polish indices decline on the day, but most of the other European markets didn't. And I think, so it's tricky because there's so much uncertainty about it, political uncertainty with respect to it. So I think, obviously, if there is a escalation, that certainly is not priced in at the moment. I think it's just another little thing adding to some of these uncertainties out there.
And where's China in all of this and the impact that China could have on European companies?
China, I see as a very clear threat. If you'd asked me about China even 5 years ago, I'd have seen it as a great growth opportunity for European companies. European companies have huge exposure to China. But the problem is China is increasingly exporting into Europe, and the trade data most recently showed that that's continuing. Exports from China into Europe are growing double-digit, and Europe is not growing double-digit. So this means China is taking market share. And again, I think this links back to the point we were talking about earlier on German fiscal. Germany, it's existential for Germany. Yeah. They haven't grown. They have this competition from China. They need to spend more on picking up their own domestic demand.
Sharon, thank you so much for joining us today. So nice to actually have you in the studio. Sharon Bell, Senior European Equity Strategist at Goldman Sachs. Coming up, it's, of course, Decision Day at the ECB. We're live in Frankfurt next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Traders brace for a pivotal U.S. inflation report that could upend bets on a series of Fed cuts after a surprise drop in producer prices. Here in Europe, the ECB is set to keep rates on hold today. Policymakers weighing the impact of President Trump's tariffs and renewed political turmoil in France. Plus, police search for the killer of conservative activist and Trump ally Charlie Kirk, who was shot dead yesterday at a Utah university. Now back to one of our top stories, and the European Central Bank is expected to leave interest rates on hold at its meeting today. This as policymakers look for evidence that the economy can endure President Trump's tariffs and renewed political turmoil in France. Now for more, Bloomberg's Lizzie Burden joins us from Frankfurt. So Lizzie, a hold is on the cards. What's the ECB weighing up?
Well, Francine, just as the Federal Reserve's about to kick off the rate-cutting party, we expect the ECB, as you say, looks to be holding rates again today because they're waiting for clarity on the economic impact of Donald Trump's trade war, and because, as Christine Lagarde has put it, the euro area economy is in a good place. You've got inflation at 2.1%, second quarter GDP revised up, unemployment at a historic low, and all of that quietening the concerns of the doves on the Governing Council. So markets pricing less than a 1 in 3 chance of another cut by the end of the year. What could be interesting is if Lagarde hints at whether the next move would be a cut or a hike. I don't expect she will, but we'll look at the forecasts for any clues, because these are the first forecasts since that US-EU trade deal was struck, and 15% tariffs is right in the middle between the base forecast and the severe scenario that they had put out. And it may be that having a trade deal at all alleviates some of the uncertainty, but nonetheless, it's expected to weigh on demand that there are tariffs there at all. So you could see the forecast revised up in the short term, but down in the longer term. We may also get some fireworks when it comes to the press conference, because, of course, as you'll know, Christine Lagarde was once the French finance minister. And so I'm sure she's going to be asked about the French fiscal situation, whether the ECB would be willing to intervene if the oat-bunt spread were to widen. As she has said before, it's not the ECB's job to close spreads, and I'm sure she'll say she doesn't want to comment on individual member states' politics. They should nonetheless be fiscally responsible. But another way it could come up is when they talk about the euro, because, of course, we've seen the euro shrugging off French politics. But then we have this divergence expected to open up between the rate paths of the Fed and the ECB, and the euro climbing towards $1.20. So that may be where it comes up. But really, the euro may be moving more on US CPI today, Francine, than it does on what happens here in Frankfurt, because that print is going to drop right between the decision and the press conference later.
Lizzie, thanks so much. Lizzie Burden there in Frankfurt. Let's also talk to Laurence Mutkin, head of EMEA rate strategy at BMO Capital Markets. Laurence, so good to speak to you. Look, I mean, there's a consensus in the markets that Lagarde's press conference, but also the inflation data, won't really shift money market pricing or the ECB Fed, divergence already embedded. Are they too complacent?
Yeah, I think a little bit. I mean, I think one of the things that's changed in the way that the ECB is communicating with people is that at the last meeting they slightly changed the language describing how they make their decisions. And as well as talking about the outlook for inflation, they also added a line about the risks surrounding the outlook for inflation. And I think not so much in the press conference maybe, but certainly in the new projections from the staff, you might see a bit more of a discussion about the risks around inflation. And I think there's a risk. I think there's a chance that publication will be more dovish than the last one. And if I look at where the market's pricing, it's kind of not pricing for that at all. Yeah. So I think although the change in tone from the publication and the press conference might be quite minor, I think the change in pricing in the bond market could still be, a decent-sized move. So are you expecting the ECB president to just emphasize optionality? I think she at the Q&A last time, somebody asked the question, I see you changed this thing a little bit, and she went, I'm glad you noticed. Right? So I guess this is her opportunity to do so. And if you think, it's a reasonable way of making policy. If you think about what the risks are around the European inflation outlook, obviously they've all increased, right? We have the euro strengthened, we have the oil price went up, which kind of, I guess, goes the other way. Tariffs came somewhere in the middle, which if you look at the sensitivity analysis in the previous report, they think is kind of a downside for growth, but also for inflation. So it's all kind of pointing to me saying, the risks are getting more skewed toward the downside for inflation and less skewed toward the upside. So what are you expecting? Are you expecting a rate cut? Definitely not. Definitely not. Today? No. No, not today. Oh, you mean ever? By the end of the year. Ever would be a bold call, Laurence. Yeah, you're right. Brave as the economist. Never give the timing. Look, the market is not priced for a 100% chance of a rate cut at all this cycle anymore. I guess all I would think is I think that the probability of rate cuts and the trough in rates could be skewed for a more dovish outcome after this press conference.
How does she navigate the question on France? I mean, I guess there's not much more that she can say except from, policymakers are monitoring spreads.
Yeah, I mean, I think what you and Lizzie said about France is it's quite right. That's a question for her. For the market, I mean, it's quite which I know better. I mean, it's interesting how the market has responded to this latest ruction. If you look at what they're pricing, okay, they're pricing a pretty benign outcome. Right? I mean, we're a AA country. We, might be trading more like a single A country, but this is single A stuff. I mean, the US is a AA country, but the UK is a AA country. AA countries are all over the place. It's not like we're talking about a triple B country. Are they going to go to? And we're not pricing for that, and the market doesn't expect it. And one of the reasons, of course, is because of this monetary transmission instrument that the ECB put into place. And if you look at it, I think this is what we've said in the market. There's like 4 conditions they have to meet. They're all a bit like grey around the edges, but every single one of them, it's quite easy to make the argument that France meets them. And so I think the market, it's pushed yields up because why wouldn't you? Volatility, you need a bit more risk premium, you need some positive carry. But it's been striking to me that the market's been fairly sanguine about not only the fall of the Prime Minister, but also these demonstrations.
And Laurence, I mean, on the U.S. side, right? I mean, it's a big day actually on the U.S. because inflation, I guess, could undershoot following the soft PPI data that we had yesterday.
For sure.
In the U.S.
Yeah.
And that changes dynamics for euro-dollar.
I think it does. I mean, this is one of the big risks for the ECB, to me, is that the euro just keeps going up. And that has an immediate effect on the inflation forecasts and could push I think the trough in the inflation forecast in the last staff report was 1.6. If that came down to like below 1.5, I think that'd be a good argument to say let's have a. But so what is going to happen with the US? Ian Lingen is our US strategist, has long been calling for like 3 times 25 this year. I guess it's anyone's guess at 130, but I think a 0.3 probably leaves us on the month-on-month. Probably leaves us still looking just for a quarter. Substantially lower 0.2 or 0.1, I don't really know. I think the point Ian makes, which I think is a good point, is the market at the moment is pricing some kind of skew of odds between the two, more skewed to 25. By the time of the announcement, whether it's through Wall Street Journal leaks or whatever, the market will know which one is coming. So the move is going to happen before the FOMC meeting, I guess.
Well put. Laurence, thank you so much for joining us. Laurence Mutkin there, head of EMEA rate strategy at BMO Capital Markets. Now, let's also turn to an exclusive interview. UBS Chief Executive Sergio Armati says that consumers will feel the impact of Donald Trump's import tariffs and that it's unclear if there's an inflationary aspect of levies in the U.S.
The true issue on tariffs will be seen on consumers. In the U.S., we will need to see exactly if there is an inflationary aspect of tariffs. And
is that still unclear at this point?
I think it's unclear.
Now, in other news, the UK's ambassador to Washington, Peter Mandelson, has been answering questions about his friendship with the late sex offender Jeffrey Epstein. This after the publication this week of a 2003 birthday book in which Mandelson called Epstein his best pal. In today's Big Take, Bloomberg News has obtained more than 100 previously unreported emails between the two men, casting new light on their relationship and showing that it was deeper than previously known. Mandelson has yet to respond to Bloomberg's further questions. We now have Bloomberg's Harry Wilson with us, who has been relentlessly working on this story. Harry, thank you for joining us. So talk us through these latest emails.
Well, it covers a period about 5 years between 2005 2010. But crucially, they have the years 06, 07, 08, when Epstein was under investigation, later charged, and then went to jail over his solicitation of sex from a minor. And what they show is that over this period, Peter Mandelson was in very regular contact with Epstein, was providing support to him in many ways, was basically acting as a very good friend to Epstein throughout this period. And even the day before he went to jail was saying, I think the world of you, stay strong. It's quite an extraordinary sort of set of emails.
Harry, what further questions do these emails raise?
I think they raise questions about what exactly was Mandelson doing to help Epstein. We've obviously, in the emails, we see sort of various interactions where he seems to be sort of almost sort of kind of lobbying on his behalf and working a network to try and, I guess, sort of help out his friend in his sort of hour of need. And so I think there are very serious questions about, well, what exactly was he doing at that time? And did he go just beyond sort of like moral support into something more?
And of course, these questions come at a crucial time for the Prime Minister. And of course, Mandel himself, just days before the US President is due to arrive in the UK.
Yeah, I mean, the timing couldn't really be much worse for the government here. I mean, with Trump flying in next week, Epstein is obviously a huge touch point for the Trump administration. And to have the British ambassador to Washington himself embroiled in this and potentially facing questions over his own future, I mean, it really couldn't be much worse for them.
Have we had any response from Mandelson himself
Not
or
as
the
yet.
team around him?
Not as yet. Nothing.
What do you think? I mean, this is a very difficult question, but what do you think happens next?
I think the pressure is likely to grow. We'll have to see what other revelations come out. I mean, the one thing with this story is that there always seems to be a little bit more to it. And so I think there's a high likelihood something else could come out. And, the pressure is only going to increase from there.
Harry, thanks so much. Harry Wilson there with this really pretty incredible big take that you can read on the Bloomberg terminal, on our website and elsewhere. Coming up, Poland says the UN Security Council will meet to discuss Russia's drone incursion. We'll speak to Russia's Natia Seskuria about NATO's response. That's next, and this is Bloomberg. We'll interview the Finnish president tomorrow at 5:30 p.m. in the UK, 7 p.m. Eastern in the US. You can also watch it on Bloomberg, on the website, and on the terminal from 9 a.m. London time. Of course, it's the first of 6 episodes of the first season of Leaders with me, Francine Lacroix. I'll sit down with decision makers shaping our future to explore the personal stories behind their public personas. Now, Poland has asked allies for additional air defense systems as Prime Minister Donald Tusk slammed Russia's drone incursion as an act of aggression and said it amounted to an international provocation from Moscow. But will Europe rally around Poland, and what will this mean for Ukraine? Well, joining us now is Natia Seskuria, International Security Associate Fellow at RUSI. Natia, thank you for joining us. First of all, what do we know about these drones? Was it intentional, or was it casually that wasn't done on purpose?
Thank you very much, first of all, for having me. I think, first of all, this is obviously a major violation of NATO airspace. So far, what we we have limited information, obviously, about the purpose of this attack. However, it is quite clear to me that this is a large-scale provocation from Putin's side. And I think what Russia is trying to do here is to test NATO unity and also to see what would be the NATO response, because there are obviously certain questions raised about NATO's unity as a result of Donald Trump's ambiguity in terms of his commitment towards European security. So this seems to me as a provocation, Russian provocation, deliberate provocation.
But Natia, what exactly is the point? Apart from testing the water, is it to show domestically that he's stronger? Does he want to go to war with NATO?
I think several things. This escalation suggests that Putin is firstly testing the limits of NATO, but most crucially, I think this shows that he's not interested in peace. He has no genuine interest in committing to any peaceful resolution of the conflict. So quite the contrary, I think Putin has become more confident as a result of recent developments. And this shows that he wants to signal that he's still willing to continue his war effort. And most importantly, Russia's ambitions extend well beyond Ukraine.
What does this latest situation mean for the relationship between Vladimir Putin and Donald Trump?
Well, that's quite a big question, because this development, I think, places Donald Trump in a bit of an awkward situation. While he has issued warnings that he would and threatened Russia with serious consequences, he has stopped short of imposing further sanctions, apart from the tariffs imposed on India. And it is highly likely that now European allies will push the US and Donald Trump administration to take action against Russia and at least commit to what he promised, in this case, further sanctions. But I think most importantly, this should go well beyond imposing sanctions, next round of sanctions on Russia, because this poses very serious questions about European security, about the security of NATO allies, and the response should be more than just words of concern or economic measures in this case.
But Natia, I mean, this is what Poland is trying to do, right? They invoked yesterday Article 4 of the Alliance Treaty, which basically, first of all, triggers consultations, and then that could open a path towards coordinated action amongst the allies. Do you think we'll see some kind of action?
Yes, what we know so far is that Article 4 has been triggered. Article 4 has been triggered before in various occasions. However, this is, I would argue, more serious escalation than the previous cases. And the response that we should expect from NATO is to maybe consider further reinforcing the border defenses, deploying NATO allied forces to Poland, reinforcing the Eastern Front, because, as we know, Baltic states, for example, are particularly concerned about their security as a result of Russia's ongoing aggression. And there were also some suggestions by Europeans that they should consider developing some sort of drone wall along the entire EU's eastern flank. I would say most controversial yet effective would be NATO to consider extending its air defense deeper into the western Ukraine. This, obviously, the so-called imposition of no-fly zone, has been argued widely in 2022, but the argument against it was that this would further escalate the conflict. However, as we see, Russia is not shying away to escalate the conflict even further, and this incident is a clear demonstration of it. So this could be a demonstration from the NATO side that NATO is united, and they won't fall short of responding effectively, and they would push back on Russia's aggressive attempts to violate the NATO airspace.
But Natia, so do you think, and we've heard it actually, for example, from Germany's deputy defense minister, that it would actually be tricky for the allies to supply Poland with, advanced system like Patriots? Would that be a deterrent? And how likely is it to have the support of Donald Trump?
Well, I think the Donald Trump question is the main elephant in the room, because we have seen he posted quite ambiguous comment on his social media. We don't really know what this means, so we don't know what would be the US's response, whether this would change the tone for Donald Trump in terms of pushing back and imposing further sanctions and becoming tougher on Russia, and maybe leaving behind the illusion that Putin is committed to achieving some progress in this peace negotiations. So this remains the main question, I would argue. And the second question is the practical side of to what extent and how effectively and how quickly NATO can provide further support to Poland, and not just only Poland, all the allies on the Eastern Front, because they are just as exposed to Russian aggression as Poland is. And especially we need to take into consideration that Zapad military drills are about to kick off between Russia and Belarus. And Russia is very much known for using these military drills for potential military preparations for another escalation.
Yeah. Natia, thanks so much for joining us. Natia Seskuria, their International Security Associate Fellow at RUSI, and of course we'll be following this story very, very closely. Now, to some other stories making news, and Sébastien Lecornu has taken over as French Prime Minister, pledging big changes as he tries to engage opposition parties in reining in the country's debt. Lecornu, who served as Defense Minister in the previous cabinet, became the country's 5th Prime Minister in 2 years. Mexico plans to impose tariffs of as much as 50% on cars and other products made by China and several Asian exporters. Now, the Mexican economy minister says the levies are meant to protect local industry as his country has become the top destination for Chinese cars. The move aligns Mexico more closely to U.S. trade policies, with President Claudia Sheinbaum preparing for talks over North America's free trade deal. And the buy now, pay later firm founded in Sweden rose 15% in its trading debut. That's after the company and some of its backers raised $1.37 billion in an initial public offering that signals the market for new listings has room to run. Oracle co-founder Larry Ellison also briefly surpassed Elon Musk to become the world's richest person. That's after a 36% jump in Oracle shares added $89 billion to his wealth. Well, the increase lifted his total net worth to more than $383 billion. This is according to Bloomberg Billionaire Index. It's the biggest one-day increase ever recorded. Also, don't forget the next episode of Bloomberg Tech Europe tomorrow with Tom McKenzie, featuring an exclusive interview with Demis Hassabis, the chief executive of Isomorphic Labs and Google DeepMind. Up next, Bloomberg Brief, and this is Bloomberg.